many times did it occur in the last 40 days? How many times did it happen in the last 60 days?
Welcome back, guys. Good evening, and how are you all doing? Well, I hope this was a great day, and I hope you keeping your risk at bay, and you're not stressing yourself over this process of becoming a profitable trader. Although, like, nope, I never see anyone say they are profitable trader. Like, for real, like, everybody say that they still want to do better than they are doing. So that means that they still have the other side that they really want to improve on. And anyone that tells you that they still have something they are working towards in developing on their trading skill, that is to tell you that the person is willing, to go a long way on it, and is he has the dedication and the zeal to keep going regardless of whatever situation it is. So that is it basically. And well, w- we all know that trading is many people tell you that trading is probably game of probability, and no trade is ever, that there's no reasons, how am I going to put it, that you can never be so sure about your trade. But let me tell you something. As if you're an ICT trader, and if you do follow me, or even though you don't follow me, right? If you're an ICT trader and you know what you are doing very well, you know that trading is actually predictable, right? Even in the high scheme of probability, it is predictable. You can call things out, you can see, you can easily know where price is going, where it is heading to, what it's about to do, what it's going to do. Now, when you know all these things, then you now know how to, try to learn how to react to them, how to make use of the information that you have. Just like we do every day, I call out this market, and when the time I want to trade comes, then I go into the chart and I reanalyze again, you just to make sure that what has happened yesterday did not oppose my bias on how can I stay positioned before that session begin. That is all basically. And I'll dive into what we have today. It's not much though, but kind of really broad and interesting to discuss, and interesting things to discuss. So what you are looking at now currently is the Euro US dollar daily contract. So the Euro US dollar daily contract for Thursday, 8 February 2024 did sweep both previous day low and previous day high, that end and previous day high, and ended up as an up close candle on the daily as an up close or candle on the daily time frame, meaning that we did sweep both previous day high and previous day low. If you can see, this particular candle have a high and a low that swept this particular yesterday low and yesterday high, so giving us an external range liquidity. I don't know how to say. Now, it is not an insider day candle, but an outsider day candle, like a candle that covers both the whole range, a candle that covers the whole previous day range. That is, it covers from the high to the low. It covers those ranges fully. It's called an external day candle. Now, insider and or outsider day candle. So it oppose the two liquidity run, that it run on both liquidity, now giving an efficient price delivery. Well, I am very pleased to see Euro deliver an efficient price delivery, just like I've said, in today trading. With the price delivery in today, I am still expecting, now listen, with the price delivery of today, I'm still expecting a higher resistance liquidity run on the upside, meaning that we are going to the upside, but it's a higher resistance liquidity run, like we keep saying. And yeah, we still oppose upside. Now, you someone is like, do you have a bias today? Yes, I have a bias, which is buy side. But now I want to be sure that wherever I am going to engage from the market, give me like an estimate of 1 to 30 pips. I look for 20 pips every day, but I want that range to give me like 20 to like let's 30 to 50 pips, so that by the time I minus the liquidity sweep, by the time I minus the the liquidity sweep, by the time I minus the distance between the current price and my entry, that is if I enter with using a fair value gap, that means the market must have created those fair value gap for me to enter, or an inversion fair value gap. So for the market, if it's an inversion fair value gap, for the market to trade above it and come back and reuse it, that is another distance. So if I cover those distance, I will still have enough distance to cover my 20 pips for the day, because I look for 20 pips every day, and mostly I do get it. Now, and I have parameters behind how I look for them, right? Just like I've just explained. Just so that's one of the reason. That's how it works. If I see a buy side line above, or an inefficiency that the market is likely to draw to, then I want to make sure that if I'm pricing, if I'm entering, there is enough space for me to still achieve that 20 pips, right? So that is it basically, and that's how I do time my trade. And casting forward, we can clearly call the consequent encroachment of today candle as a potential to to not see algo price below it. So if we are still going higher, meaning I want to see it, the market use it as a support. This daily candle consequent encroachment, yeah, that is the open, the open and the low of this candle, the midpoint, which is the daily consequent encroachment. I've just emerged on using this line. So I want to see that hold price. Like I want to see markets use it as a support. I don't want to see, or if you are going to go higher, I don't have any reason why we have to come below, right? So if we did not go lower and use this buy side, then that give us a new swing low on the daily price. And if there is a swing low, then there is potential that we might get into this bearish order block before we continue the buy side, the sell side delivery. So that's basically now what I have on the daily, and we can also expect euro to price into the, which is this bearish order block, opening price, and fill the lower time frame inefficiencies. And my draw on liquidity is buy side plus inefficiency on the lower time frame. So let's go to the XY. So this is the XY daily contract, and we can, as we can see, also we have the consequent encroachment of this week, which we don't want to see price go above it, and we are currently trading inside the volume imbalance. Now, if you see, we have used this imbalance repeatedly. That is, it has already filled those inefficiencies. Now we might price into it and reuse it to go lower, or we price into it and price into it daily, then we ascend higher. So basically, whatever it's going to do, there's not much information here, but you still have a lot of things that you can take into consideration as well. So you want to go in with the slides, with a whole lot of information in your head. Now if you see today the XY, let me expand this. I want you to see we didn't take out the previous day low on the XY, so the low still remain untapped and the high was swept. And that is it basically. So we have the sell side on use already on tap, which we are going to look at market to take going in tomorrow. So that being said, we go to the 4 hourly contract on Euro US dollar. So basically, sorry. So this is the Euro US dollar 4 hourly contract, and I want to bring this look closer, too far away. So this is the Euro US dollar hourly contract, and we can see how we rally a little bit higher, then give us down close, and immediately we rebalance that price, right? So this is just liquidity. Now the market is actually engineering liquidity so that we can be able to deliver price lower, taking out all this liquidity. So it's trying to create liquidity. It's trying to set buyers into the market, while uninformed buyers right into the market. You can be a buyer here, but you don't have to have a long hour threshold, right? I'm going to explain something on the 1 hour when we get to that 1 hour time frame. I want to explain about a particular concept, right? So the Euro US dollar 4 hourly contract show nicely how price deliver in today's trading. Now on the 4 hour, we can see that the 5 o'clock AM New York local time 4 hourly candle deliver the decent sell program. Now this sell program occur, this particular down close candle occur at 5 o'clock AM 4 hourly candle. That is, it begins 5 o'clock AM 4 hourly candle, and that deliver that decent price lower. Now in today trading, okay, sorry, okay, yeah, that deliver the sell program in today trading. Now casting forward, there is not any reason to see euro price lower, and we don't have any 4 hour PDRA except looking at the area where the daily consequent encroachment is as a potential price support, meaning that we on a 4 hour we see that there is no inefficiency, no other block, no 4 hourly other block or something like that to use to support price at the current trading area. Or so, but we might also look at this daily consequent encroachment. So we, since we are not expecting price to go lower below this consequent encroachment, then we can look for any lower time frame PDRAs that lies between this area and the price and the current price as a potential entry price, right? So that is it basically. And the draw on liquidity is buy side liquidity plus inefficiency. Now we also have the 4 hour fair value gap or CB, that is a potential draw on liquidity, which is going to deliver price, which again is going to deliver price lower if algo price to that area of interest tomorrow or next. Meaning that since we have a 4 hourly fair value gap or CB here, then there is a potential reason that when we get here, we're going to see another let me say another giant move lower like this. Yeah, right. So we're going to see another giant move lower, but maybe it might not go that far. So basically, my drawn liquidity is this particular high and today high, this area. So if we did get here, and also if price want to go a more deeper, we might look at this 4 hourly inversion fair value gap, right? So we can barely see how clean it is, and market might eventually trade into that area. So that is it for the 4 hourly candle on euro US dollar. So let's go to the XY. Like I said before, that the SY is what I use as an indicator. If the SY is going lower, and let's say I want to be a buyer on euro, right? If I want to be less tomorrow, I want to be a buyer on euro, and I see the SY going higher, then I will not engage. It's either I sell euro or I don't engage at all. But if they are moving in opposite direction, that give you another clue of higher probability trade. So that is it basically. Now on the 4 hour, we can see that look the point where the daily consequent encroachment is. So now since we have the daily consequent encroachment here, and we still have this our 4 hourly bullish breaker, so it is very clean, and we might see price get into this area. And I explained this particular line yesterday, that this line is the previous or the upper week high. So if we did not have efficient price delivery this week, then we might type on the inefficiency that will be created and use it to go higher. So basically, we just trading on a significant trade, and there is no 4 hourly PDRA as well to support our bearish move tomorrow. But we're going to use this daily consequent encroachment. We are going to go on a lower time frame and see if there is any potential areas to support our, to support a lower price delivery on euro. But notice that the any move lower is a higher resistance liquidity run. That means you are likely to be taking if you are selling, because the market will be going very lower, very slow, and we if it's going up, it will just go punch up like very fast and continue the price lower, which is what I want to emphasize more on the hourly. So let's go to the Euro US dollar hourly contract. So this is the Euro US dollar hourly contract for February 8th. Now, the Euro US dollar hourly contract shows nicely the price delivery for Thursday 8th of February 2024. Now, the daily profile is an obvious 2 o'clock AM New York local time as the high of the day that swept the buy side liquidity and tap on the hourly fair value gap or CB that set the leg for a decent sell program in today. Now, what I'm trying to say is that we this the 2 o'clock AM New York local time candle did price into this inefficiency, although we priced into that inefficiency before that time, which is around 11 o'clock PM in New York local time, Wednesday 11 o'clock PM New York local time. So we did 11, 12, right? Okay, we did price into that, taking out this high. So there is basically two buy side liquidity. We swept this high, midnight high, and this high also, and we price into this fair value gap. Now look how if perfectly price delivered. Although I did not trade today, no trade for me today, right? Like I said yesterday, I was not going to trade. I didn't even look at the chart. Maybe if I come and I look at the chart, I might be like so sweet. Like how many pips did this offer if you did engage? This is almost 30 pips, right? So you see what I was explaining earlier. You see how 30 pips. So if I measure, because I won't enter here, I want to see it give me a break of structure. Then I will now enter using this particular candle. So if I enter here, at most I'm supposed to still get like up to 20 pips at most. So that is it basically, and that is how I time my trade and that's how I engage with price. So let's continue. The low of the day is formed at 8 o'clock AM New York local time that tap on the 1 hour inversion fair value gap, and this lead to a reversal in the direction in price direction higher, meaning that when we deliver this price lower, this particular candle is 8 o'clock AM New York local time that tap on this 1 hour inversion fair value gap. You know, I was calling out this area for you guys since the day before yesterday, and yesterday comes in, we price into it and we rally higher. And also casting forward, we have both 1 hour fair value gap or BC and 1 hour inversion fair value gap to look forward as a potential support area for euro to for euro going forward, and it is above the daily candle consequent encroachment. Now, meaning that we have this inversion fair value gap, and also you can see a fair value gap here, but I did not use this fair value gap, right? I did not use this one. I used this one because this one covers both the fair value gap and the order block, right? There is a 1 hour or bullish order block here. So now I use that to cover, and this line here is this particular line is the daily consequent encroachment. So since it is above that area, so I'm going to use it as a potential area. If price get here, I want to see it use it to rally higher. Well, time is not on our side, and with the look of things, I'll prefer to sell tomorrow if price gets here, right? Because this might not offer me much more efficient, and it is kind of very, it's going to be very slow overnight, and you don't want to be in such trade. So my hourly draw on liquidity is buy side liquidity plus inefficiency, and my entry is fair value gap or BC, which is that one I call out, and my inversion fair value gap plus 1 hour order block. So I have three PDRAs on the hourly time frame to look out for. Well, this has bring me to the end of today. I hope you did get something from it. So please do follow, subscribe to this channel, follow us, share this video, and to reach out to more people. Thank you. God bless you. See you tomorrow.